Well, infrastructure is widely recognised as being a stable and robust asset class, somewhat insulated from the economic environment we might face into, given the critical nature of the services provided. And COVID-19 has, without question, been one of the toughest tests yet for infrastructure, and overall it has proved itself to be highly resilient. However, there are some notable differences across the subsector of the infrastructure landscape, and we would call out those that are heavily impacted by demand-based revenues versus availability-based revenues. And a good example of that is perhaps passenger transport. Passenger transport is one that's been heavily supported by the UK government, particularly the road, so buses and rail infrastructure, where we really see those as critical services to keep the UK moving. One sector we would call out as having a notable absence of government support, however, is airports. Well, the infrastructure sector is one that's heavily impacted and influenced by the government strategy, which itself is impacted by the macro environment we face into, whether that's Brexit, COVID-19, climate change. And the infrastructure sector at the moment is one dominated by the green industrial revolution, a desire to build back better, levelling up in the north, and this is all encapsulated in Boris Johnson's 10-point plan. These will all create opportunities for infrastructure. The UK is a world leader in renewables, most notably offshore wind, and the government wants to continue this with an ambitious plan of up to 40 gigawatts by 2030. To support the industry, there'll be further investment in ports and manufacturing infrastructure, which will help the sector. And furthermore, there's been an announcement of 8 free ports in the UK. But in addition to renewables and free ports, there's still a lot to do in transport decarbonisation and heating. We're very much at the start of that journey. These can't be standalone projects. We need sustainable new solutions that can be established and integrated into legacy infrastructure, and this could be a real challenge. So my view of the UK Infrastructure Bank is positive. It clearly shows commitment to infrastructure generally and to society as a whole. It will be launched in spring and based in Leeds, and that's further testament to the levelling up agenda that the government is progressing. But there continues to be ample liquidity in the senior debt market from both banks and institutional investors for infrastructure. It continues to be an attractive asset class. However, where the UK Investment Bank can really help is in early stage development of projects where there's new technologies and where they can really bridge the gap and help mobilise more senior finance and unlock those projects. So at Lloyds, we support all clients across the infrastructure landscape. Our equity investors have continued appetite for the sector, and it continues to be seen as a somewhat safe haven for investments, especially those assets with contracted revenues. For those that have benefited from the government support during COVID-19, this has been very much welcomed by our client base, not only the financial support, but also the working partnership between the public and private sector. And finally, there's a real focus on ESG. There's widespread recognition of the role infrastructure can play in terms of the sustainability agenda. And it's pleasing to see that our clients in the UK market are really embracing sustainability as a key area of focus as we move out of COVID-19, a real drive to tackle climate change as well. And here at Lloyds, we want to continue to play our role in that and support our clients.